How's it going? Those of you who like this stock and those of you who like Meatball and maybe some of you who like Andrew. My name is Andrew. This is the show where we talk about personal investments. We talk about exactly how to get you educated in the stock market, and we're going to talk today about these EV vehicles and the play. Currently, CCIV is having a massive sell-off, and it is not looking pretty. It is down 30% on the day. We are looking at Tesla and NIO. Tesla today had a big dip all the way down to $620, but it has seemed to recover a little bit, but it's still down 3% on the day. NIO, of course, has saw that exact same dip down all the way to $41, and then it has bounced a little bit back, and now it is at down 5% on the day. There's a lot of news that we need to cover. There's also a lot of important steps on the path of whether or not Tesla is going to shoot back above 800 or actually fall as low as 400 because of the technical levels of support and resistance that we have historically seen. So I would think you guys should watch until the end of the video to fully understand what I'm about to explain. So let us start with Tesla. So Tesla is currently at 690. That's down 3.5% on the day. And what we saw earlier today was that when it dipped all the way down to 620, that had us lowered down on the RSI, the relative strength index, below 30 RSI, which means that it at that point was oversold. A good amount of correction happened, and this new level of historical support is just a price point where a stock bounces off from. This is the new one at $620. Now, the ones that I've labeled here before, 760 and 790, were seen all the way back in early February. And the one that I want to make sure that you guys all take a note of is the fact that if we go out and see a macro view, which you guys could see, the purple line here is the exponential moving average, gives us a sense of the momentum that Tesla is having on a macro sense, and the blue line here is the 15-day moving average, gives us a little bit more of a micro view of what could happen. We zoom in to see that the last time that Tesla had a level of support that was lower than 620, which is exactly where it bounced off from today. See, the data does not lie, was all the way back in December. And if we see any amount of support lower than that, was all the way back in November, and where Tesla was all the way down at 555. And the next level of support and resistance that we would have Tesla fall all the way down to is $490. So Tesla has never mooned past $900. It has never hit that $1,000 hard mental barrier to try to pass that $1,000 mark. But as of right now, it seems that Tesla is either moving in a bearish momentum, as indicated by the RSI, and indicated by the micro view of the 15-day moving average. So Tesla, it is on its rocky feet right now, and I have to tell you that none of this is financial information, but I am vested in Tesla. Only 3 stocks. When my parents told me to buy some on Chinese New Year, it was at $800. So I am actually at a bit of a loss at Tesla at the moment, but just a couple of stocks wherever it counts. Now, importantly, we have 2 pieces of information here. We have Cathie Wood's funds takes 2 big hits as Tesla and the tech trade show signs of unwinding, and Lucid Motors humbly embarks on the difficult task of mass producing its electric cars. So before we cover that news, I want to be able to do a little bit of technical analysis for CCIV and for NIO as well. For NIO, we notice that we have these different lines of support and resistance, and what we have here is that the next possible level of support and resistance that we could look at is that we see the price could jump back up to $53, or if we zoom out and see a lower level, the last time that it got this low was all the way back in the December. And we would see a drop all the way down to $44. So in terms of risk and reward, it actually has a 50% chance to be able to drop lower or rise higher. So NIO right now is up in the air, and the risk reward is probably a little bit too on the 50 percentile to seem enticing for most people. However, CCIV is the king of the crop right now with a negative 30% on the day behavior. It is red candles all the way down, and it definitely is already improved on how far below it got today. It got all the way down to $30, and now it has recovered up to $38.70. If you see the historical levels of support and resistance, last time it got all the way up to $63. It bounced off of this new level at 34, and the next level that it could dip below is 27. So that actually has a pretty good risk to reward, as long as you understand that the market correction isn't quite on its last legs yet. These stocks are all red across the board, and if you are curious about whether or not this is a good time to buy into CCIV, only if your risk appetite allows it to either fall down even further to $27 or see it rise back up to a previous level of support at $63. This, of course, is not financial advice, and I hope you guys get some value out of understanding what these stocks are likely going to drop down to or rise up to. But now we're going to go and read a little bit of the news that we have to understand. Public perception is always 50% of the equation, and Cathie Wood's funds is a big proponent of these EV stocks right now. Some call it the Cathie Wood sell-off. At Open Tuesday, the top names owned by ARK Investment Management were the biggest decliners in the market. Palantir, Tesla, Roku, Square, PayPal, Teladoc, Baidu, Zillow, and Shopify, they were all down, and Spotify, by double digits. All were major holdings in funds like her flagship, ARK Innovation ETF. So as we can see here, big drop in the very beginning of the open market, and now we are seeing a little bit of a sideways motion here. It was like a mini panic, Alec Young from Technical Alpha told me. The market is getting concerned that the Fed is risking getting behind the curve of inflation, and the market is pricing in more inflation, which means lower prices for tech stocks. The market stopped dropping as Federal Reserve Chair Jay Powell's congressional testimony was released. Powell repeatedly emphasized he does not expect inflation to rise to troublesome levels. Monetary policy is accommodative and needs to continue being accommodative. Too many people on the boat? The damage has already been done. If you guys watched the live streams earlier, you would note that there is already so much double digits sell-offs for a lot of the companies that we've been tracking for the last few days to weeks. Fear of higher rates may have been the initial catalyst, but now, as Peter Tashir from Academy Securities told me, people are very aware that they are long a lot of stocks at very high valuations. The frothiness is now the catalyst, not rates, he told me. As for the current mania with everything Cathie Wood and ARK Investments, Tashir on Tuesday penned a piece called Noah's Ark for clients telling me too many people are on that boat. A lot of people, I think, have bet more than their risk appetite is comfortable with. ARK Innovation is about 15% from its recent high. And that is basically the culmination of all of these stocks dropping double digits right as the market opened. I don't think this is over. I think this may be the start of an unwind. Everyone assumed that there are super safe companies. Her management style seems to have doubled down on her bets, and a lot of this is starting to feel a little evangelical. People now view these funds as cannot lose, and that's where you get into trouble. Of the top 10 holdings in Innovation were underperforming as the NASDAQ on Tuesday. Big curiosities there, but we probably also want to talk about CCIV. They humbly embark on the difficult task of mass producing its electric cars, the CEO says. Lucid Motors CEO Peter Rawlinson on Tuesday touted what he called the electric car company's world-class tech, but acknowledged challenges around the automobile production. Remember, they have not created a car quite yet. Rawlinson, former Tesla engineering executive, appeared on CNBC the morning after Lucid announced a reverse merger with a special purpose acquisition company CCIV to go public. It's the largest SPAC transaction involving an EV company, and that is history in the making. SPACs are an alternative to initial public offerings for firms that want to become publicly traded stocks. CCIV shares sank nearly 48% to $30 per share in early Tuesday trading. Now we are noticing that it's only up to negative 32%, giving the merged company a market value of more than $50 billion, according to Reuters, bigger than Ford Motor. By comparison, direct competitor Tesla has a market cap of more than $637 billion. Ahead of Monday night's announcement and subsequent stock decline, recent deal speculation has pushed CCIV up 470% this year alone. Upon completion of the deal seen in the second quarter, Lucid is expected to be listed as on the New York Stock Exchange under the ticker LCID. I think the evaluation is a reflection of the technology, Rollinson said, while adding that more work needs to be done for Lucid to generate investor return. What they need now is humbly and diligently execute and get this into production. This is what will truly drive the value, he stressed, in a recognition that manufacturing an electric car on a mass scale is a difficult endeavor. So the deliveries of the very first car, the all-electric Air, is only set for the second half of this year. So that's a delay already from the forecast. Production will occur in the southeast of Phoenix in Casa Grande, Arizona, and the Air starts at $77,000 without the federal EV tax credit. Lucid projects that it will earn $3 billion roughly EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. According to an investor presentation, it projects to deliver 250,000 vehicles, just a quarter of a million cars that year. And in addition to luxury Air, Lucid plans to produce an SUV in 2023 and eventually more affordable vehicles down the road. So they have the plan. They have a delayed plan, but as of right now, not a single car has been sold quite yet. So if you guys understand the EV space just a little bit better now, understand that it is incredibly volatile. It is falling like a brick if you are a CCIV, but it might be a great deal for Tesla in terms of which way it could go, either all the way back up to 800 or to a lower level of support and resistance like 500 or 400. If you like this video, make sure to give it a like, make sure to smash that subscribe button to learn a little bit more, and if you wanted a technical analysis app just like the one I was using like Webull, go ahead and click that link down below to get not only this app for free, but 2 free stocks along with it. For now, but not for forever, hope you guys have a nice day.